these are the EMAs, the 21, the 50, and the 100. Just to clarify that, just to be sure, open source code. We have that's right, the 21, the 50, and the 100. And if we can just get rid of that again, like so. So we're seeing that the 21 has been broken now quite definitively with this candle coming down, although with not much volume, but still, we have a close below it, and now we have another candle in the process of going even lower. We're coming down on the 50 moving average. Do we find some support here? Maybe yes. I think that we will find some sort of support and make a move up to sort of here or so. I think that's the somewhat most likely scenario, but I think that almost equally likely is that we just come right back down and test some new lower lows. I think both those scenarios are more likely than us coming, just smashing through all of these resistances, smashing through especially 10,400. But nonetheless, I think that, yeah, well, that's what I think. I don't know what I'm saying. I think it's too early. So let's zoom in a little bit more. Again, being aware that we're touching the 50 moving average on the weekly, which of course corresponds quite closely to the 50 EMA, which corresponds quite closely to the moving average 50 and 100. So on the EMA, the 100 is a little bit lower, right? But on the moving average, it's converging here, and the 50 has a chance to break out of the 100. It's interesting to note actually that the 50 it's taken a while. Like we've been consolidating for a while now, and just basically coming down slowly, like low, lower, lower, high, lower, low, lower, high. But all this time, the 50 moving average has been taking the average of this past move up and saying, well, yes, we're coming down, but actually the 50 moving average is still moving up, right? Whereas the 100 is, for some reason, the 100 is slightly coming down here. I'm not quite sure. Well, obviously it must be one of the previous candles which had a big, it was maybe even this one. We could probably actually even measure this quite simply. So this is the 100. Why is the 100 coming down here? Well, we go to the last 100 bars, and yeah, exactly. You see that this starts with an absolute destroyal of price, and that's why it's taking that into account. Before it was taking this into account, but this big move up. But now we're taking into account the starting from this big move down. So the average is actually looking pretty bad for the last 100 days because it's not taking into consideration the big pump. So that's why the 100 is going down. And as for the 50, well, if you start it just from here, of course it starts pretty neutral, then it starts going up like crazy, and so it's interesting to note that it's not actually going down yet in accordance with this consolidation, and that's why you have the 50 and the 100 are sort of staying very stable here. But the EMAs show a different story, whereby the 50 and the 100. So the 50 is actually where the 100 is, and the 100 is actually where the 50 is, which is quite interesting. Let's actually, let's go to the moving averages and just make these as line with breaks maybe. Is this going to, let's see what that does. Line with breaks. Can we see a difference here? It would appear that we cannot see any difference, which is quite strange. Let's make the moving averages step lines. Sure. Or we make them crosses. No, I'm not a big fan of crosses for whatever reason. Circles? Circles are nice. Let's make them circles. Like so. Yeah, that looks good. Let's make it circles and circles. And now we'll be able to see very clearly where these lines intersect. No, but I don't like that you can't see the colors clearly. God damn it. Okay, let's try it again. Let's maybe just make it a bit thicker. Something like that. Yeah. And something like this. Yeah, this is already very notable. Okay. So the 50, now you can see that the circles of this 50, these yellow circles, are coinciding, which is the 50 MA are coinciding with the 100 EMA, and the 50 and the 100 moving average is coinciding somewhat similarly with the 50 EMA. The 50 EMA is actually, interestingly enough, is sort of going and making a move up, while the 50 MA is making a move down. And yeah, but in any case, this conclusion is quite simple, is that in this general zone over here, we're finding support. I mean, I've got my box down here because this is where the volume profile is, and this is where we would have confluence with this support zone. But really, to be a bit more accurate, one would, to include the moving averages, you'd want to include it all the way up to there. And then, of course, you have the 6,000 level, which is all the way down here. So I would be looking to buy really anywhere within this zone as a potential sort of, with a stop loss sort of down below 5.5 or something like that. But for now, let's go to lower time frame. On the daily, we're seeing that we've crossed all of these important averages, which is not a great sign. And the 50 is now making an attempt to cross through the 200 EMA moving average, which is not ideal, obviously. You can see that more clearly here. And also that we've just broken below sorry, did I say the 50? The 100 is trying to cross below the 200. So I expect we will see some sort of, and especially since they're going sort of almost perpendicular now, we might see some interesting action here where we have some sort of support before the 100 crosses the 200 bearish. Similar to what we saw here, where it consolidated a bit before making another move. So of course that could also happen where we consolidate and make another move down. But yeah, we've just crossed the 50 moving average here. This is not a good sign for the bulls. Yeah, and also we have a little bit more volume here. Now let's look at the EMAs. And here, of course, we're seeing something similar, the 21 crossing the 55 bearish. We've crossed the 100 a while ago. So really not ideal. The only thing that's giving us hope here is that is this blue box, right, where we had a lot of volume before, and of course this volume profile down here. So now the real support is going to be over here, where it's a 786 and this sort of big volume profile here. I'm going to say 7876. That's sort of potential support, and I'm not loving it. I had this box over here because this is confluence with this line, but we've broken through this now, right? With the wick, and let's have a look. And of course, here obviously the MACD is looking bearish now, decidedly bearish, and the RSI is coming down towards 35. No obvious support here, although that's actually not true, is it? We have quite clear potential support over here. And we do also have the price potential support here. Let's have a look at the 4-hour. And of course, we're coming on the 50 moving average on the weekly, which might give us some sort of support. I think, buying here is really a risk because there's no sign whatsoever that we're actually breaking out of this. That being said, in pullback theory, you have for the complex pullback, you have this, what you're often looking for is a wick moving out of the pullback, right, where we come through this, what was previously a support, have a wick sort of push right out of that, and then and that's kind of the momentum that's taken to get to the next move up. But it's a little hopeful at this point, because also we've crossed the 618. The 618 would have been a nicer level to sort of say take some risks, you know. And that's why I was looking for really get in around this 8.5 zone if we'd have touched it a little bit earlier, but we didn't. So now I'm looking at the 786, which, you know, which isn't there yet, you know. So I'm thinking, wow, okay, well maybe we really come down to touch 8,000 before we make another move up. And I'm not too thrilled about buying here. But then again, of course, the RSI is, last time the RSI was at this level, we consolidated for a while and then made a big bounce up. Minky, Minky, come on, Minky. Come on, Minky, I'm up here. And she goes downstairs again. I don't understand why that is, but there you go. Maybe she's deaf. In any case, right, what are we looking at here? On the 4 hour, we're also looking at a potential support here, right? This was on the daily that we saw this potential support, and now on the 4 hour as well. So I'm liking these lines that I'm seeing here. It's just that I don't know how much relevance we can give to them. I mean, on the MACD, you can see that we have, yeah, we're breaking the previous low. So it's a gamble here, no doubt. That being said, yeah, we do have this sort of notable volume profile here in this zone, but it comes all the way down to 8,000. So I wouldn't be thrilled about buying here with a tight stop loss. And the hourly has really exploded downwards. That being said, you know, all this fear is kind of often a good time to buy, and I just feel like we're going to make a move up before we make another move down. I would be tempted to buy in this area over here, like maybe make a tiny buy here and then make a more substantial one here, and then just stop loss out at sort of 8.1. Or even just ladder down here and, you know, just sort of try to average out based on the trade, try to average out around, maybe even around here, you know. Like we're going for the 8,000 now. Let's just have a look at what this blue line down here means. Let's just draw our Fibonacci structure again over here because it's hard to see on the daily. Okay, 786 is right there, so not too far off. So I'd be tempted to enter some preliminary positions over here and then stop out really 7940-ish. Let's see, 7940. And target, well, yeah, see, that's the thing. This gives us quite a good risk to reward. Of course, we're not getting into a big position at this level, but you know, we get in some here, and then some here and here, and then we stop out here. And then, you know, maybe I'll only fill a quarter position because it won't reach those lower levels. But at least I will get in some of the action, and I don't take a big risk because I'm, yeah. And then if we really break this blue level, this blue line down here, well, then things, you know, then really we give up, and that's that. And yeah, it's a risk either way, right? Because it's not an ideal scenario, but I think that it's one worth taking simply because of this explosive move up. And yeah, that's that pretty much. And of course, the RSIs are really looking low right now. The 1 hour is down really low. And the 15, of course, we bounced off quite intensely from. And you can see a real trend change here on the 15 where we've taken out previous lows. But I think that we're due for at least a small bounce before breaking 7940. And I think that before breaking 7940, we'll have a more substantial bounce, whether it's here or whether we come down again and then come up. I think that it will be worth the purchase. So that's what I'm going to do.